Got On the Spot coming up here in a moment. I've got myself and JP Hampstead. This is my inaugural version of On the Spot. I guess usually Kevin Hill does this one with JP, but Kevin is out for the week, so I am filling in. JP, welcome to FreightWaves Now here on this Wednesday. What are we taking a look at on the Spot this week?
Yeah, we're basically just looking at all the different freight markets, especially impacts, pre-July 4th to rates, right? Caused a really sharp spike in spot rates based on truckstop.com load board data. So those rates shot up to $3.33 a mile. They've been kind of stuck at $3.19. We expect that to come back down and kind of resume like the normal trend that spot rates have been on since March, which is basically just like a gradual sort of softening, kind of gliding down and settling. What's really interesting though is that contract rates, based on our payments data, have continued to rise, and especially since the beginning of May have come up, a lot, right? And so now they're already at $2.56 a mile for the nationwide average, and I just think it's interesting because, this is like the broker's like happy place, right? Where you've got contract rates that are still going up. You've got spot rates that are still coming down. Hopefully, widening gross margins on the backside of this cycle. I think it's a really interesting time for brokers, and also just for transportation companies in general. I think that there's a sense that the market is really elevated and really strong. No one knows exactly how long it's going to last, but people want to make hay while the sun is shining, and you'll see. I think you'll see a lot of really sort of creative and innovative M&A. That we've already started to see some interesting deals, right? Yep. You guys have been talking about KnightSwift and AAA Cooper all morning, but I think there are a lot of questions about exactly what KnightSwift's intentions with AAA Cooper are, whether it represents like a really strong conviction bet on the future of LTL. Like 10 years ago, I think you could just sort of comfortably say that it was a $40 billion industry that was like sometimes profitable, and it was probably going to stay that way. Now it's very much on its way to $50 billion, and the leading carriers are doing very well. Right. So is it a bet on the future of LTL? Are they going to somehow combine, sort of local day cab capacity to manage their yards, to kind of, increase the asset utilization of their truckload fleet? You know what I'm saying? Like let the LTL tractors do drop and pick, and arrange those trailers. I think it'll be really interesting to watch the 10 Qs over the next couple of years and see how that shakes out.
JP, I had Craig Fuller on Great Quarter Guys yesterday for the first time, and I just asked him if he liked the deal, and he said he loved the deal. I wanted to get if you had an opinion of the deal overall, KnightSwift's entry into LTL. Do you think it's a good time to be getting into LTL?
I do. KnightSwift, not many people know this, but KnightSwift actually took a shot at Roadrunner prior to the Andrew Leto-led investment. They were going to value the carrier at about $80 million, so lower than the $100 million valuation it eventually got. And then you think about Swift in 2017, which was decidedly an underperforming truckload carrier at the time. They have a history of, I think, first of all, Swift was sort of an astonishingly successful merger, especially at that scale. And I think that it's clear to us now that the management team has confidence in its ability to acquire an underperforming carrier and improve it a lot. And if you look at AAA Cooper's sort of main regional competitors in the Southeast and Midwest, namely Averitt and Southeast Freight Lines, they both they lag those two carriers both on a service and profitability. So there's a lot of sort of an operating leverage opportunity for KnightSwift to come in, crank out 500 basis points of OR improvement and see what other kind of synergies exist in the network. I think the danger will be if they try to, for example, use too much KnightSwift capacity to, fill in a line haul on the AAA Cooper network, or vice versa, and end up kind of like stepping on the neck of their own fleet.
Right, you can't integrate just for the name of integrating, right? You got if it's accretive, then it makes sense to do so. If it doesn't,
well,
don't do so.
And there could be situations where like KnightSwift Logistics is brokering freight for AAA Cooper, but inadvertently like pushing down the rates for you know what I'm saying?
Yeah, of course. So I saw that CEO Dave Jackson of KnightSwift, he had said that I'm paraphrasing here, but he had said that he was happy to finally get a deal done and bring AAA Cooper into the portfolio. What are your thoughts on that? Do you think that this has been an ongoing issue, or they've been trying to get into LTL, as you said with Roadrunner? They've just been kind of itching, looking for an opportunity here, and they finally found one here in AAA Cooper?
Yeah, I think that LTL has become a lot more attractive. It's getting volume pressure both from parcel on the bottom end, from truckload on the top end. It's a lot more consolidated, more stable pricing. It feels a lot more like truckload dedicated in the sense of predictable yields and just the way the assets are utilized. So I think it's probably a way to diversify revenue for KnightSwift and to get kind of a piece of transportation that is a little bit separated from the spot cycle and truckload. So I do think it makes sense. I don't know how many more deals like that we'll see. I think that to a large extent, the LTL renaissance that's been taking place over the past couple of years has sort of been a tale of two cities, where you have some great outperformers, like Old Dominion, Daylight, it's a smaller carrier that's done very well for itself. And then you've got a bunch of laggards that are actually like distressed properties. So people like Brown Transfer that are owned by private equity that are have unsuccessfully looked for an exit. So I don't know, like some of those companies might be like too expensive for a truckload carrier to buy. Some of them might be in too bad of a shape for a truckload carrier to buy. So I don't know how many more carriers are kind of in that sweet spot of like, okay, this thing isn't like a dumpster fire, but I can like improve it enough with my management team to get some arbitrage.
Right, I see. That was going to be one of my questions. Was did you see them kind of just repeating this? They've still got a really good balance sheet. They've got appetite for growth. It seems Dave Jackson had said they want to continue growing this business after AAA Cooper. I just figured that acquisition would kind of be the next line, but it does make sense. Like you're painting a picture here of a dichotomy between really well-run carriers that are too expensive and poorly ones that are not really worth the stab.
Yeah, I think the thing to think about here would be that LTL networks are very much more physically constrained and geographically determined than truckload networks. And so just, if there is more like white space on the map for them to fill in, if they want to be on the West Coast or the East Coast, if they have a lot of density there, they can cross-sell LTL, things like that. We may see more acquisitions, and there are plenty of second and third tier regional carriers that could fill those holes.
Right. All right, let's shift gears here for a moment to a little bit of employment versus OTVI talk. I think you have some points here that'll make for good conversation.
Yeah, one of the things, we get questions from shippers, carriers, brokers about pricing power all the time. Obviously, we have the DHL pricing power index, but we get questions about sort of like, what's the data that we should be looking at to determine whether carriers will continue to have pricing power in this market or not? And I think there are a lot of different ways to think about it. Traditionally, people looked at something simple like new truck orders to figure out where we were in the capacity cycle. But now with so many production constraints at the OEMs, you have to like factor in the backlog and all that kind of. It gets a little complicated. But one sort of simple way to think about it is, what's the total count of tractors for hire fleets? What's the year-over-year change in that number? How much capacity have we added to the industry versus volume and volume year-over-year change, right? And so We see that the total count of tractors at for-hire fleets is up about 2.6% year over year, but tender volumes are up 13%.
Right.
So as long as that gap is meaningful and not shrinking rapidly, then carriers have pricing power.
Yeah, I wanted to. It's analogous to you look at inventories and sales growth at retailers right now. It's like everybody's saying, "Man, you need to build more inventories." Just the same way you need to hire more drivers. Like, hey, we just can't keep up with growth right now. Things are just it's almost impossible to keep up double-digit growth year over year.
Yeah, to me, what's fascinating is that this is we saw it probably in parcel first. Like if you remember, like the Q2. 2020 calls with UPS and FedEx that had those like crazy kind of B2C mix shift numbers. And eventually, 9 months later, it showed up on the ocean, but it's still ongoing. And it's really affecting all modes of transportation right now. So it's a really interesting time when the carriers appear to be in the driver's seat, sort of worldwide multimodal.
Yeah. Certainly. I think immigration is something I talked about on Great Quarter Guys yesterday as a point that's adding weight to this and making it even more difficult. But that's been on the spot for this Wednesday, this week here, the first week of July.